Joining me right now is the Teacher Retirement System of Texas Chief Investment Officer, Britt Harris. Britt, thanks very much for joining us. We want to talk a bit about markets right here. How do you think the UK's decision to leave the EU impacts investors? And have you made changes to the portfolio in reaction?
Well, it's only been one day, Maria, so I think the main impact we've seen so far is not particularly concerning. You know, what happens from here is the question. For the first time in 50 years, a major economy has left an economic trading zone. So over the last 50 years, 150 have come in and 0 have gone out. So the record is 150 to 0. Now it's 150 to 1.
Wow.
The betting markets here tell the whole story. As you know, the investors were on the wrong side of this. The betting markets on a dollar basis said it was 70% chance that UK would remain. However, if you look at individual investors, the number of investors in that pool, 70% of the individual investors or individual bettors said that they would exit. Right. So in this case, the little man beat the big man, and that's happening all over the world. And by the way, this is the third major miss by global investors in the last 2 years. The first one was the miss on OPEC. The second was the miss on Trump. Right. And the third is this miss on Brexit.
Wow.
So some of the key assumptions we've had for the long run are really changing. Yeah. And the question is, you know, will the Eurozone be ultimately demised, and will globalization end? And right. Are we really just a tribal group of people? And that would be a big problem for the world.
I'm with Anthony Scaramucci this morning, and Anthony, you've seen opportunity in this sell-off in a big way, haven't you?
Yeah, listen, we've been buying the British pound, but Britt, my question to you is a bigger, more macro question. Do you think other countries will break from the EU, and what do you think that means for our election coming in November?
Well, I mean, the other countries in the EU that people are concerned about, of course, are Spain and Italy, France, the Netherlands. We had the vote in Spain, coincidentally, yesterday. And, you know, what happened here in the UK was, frankly, a big shock even to the UK citizens. I arrived in the UK actually on Saturday morning just after the elections had, after this vote had been taken. And I've been here with the UK people talking to them the last 2 days. Even those who voted for exit are surprised. Many of them thought that they were voting primarily just as a dissent vote. They didn't think it was actually going to happen. It's kind of like taking a test, realizing you didn't really prepare for it, and when the test results came out poorly, asking if you could take the test one more time. And so as you see, 3 million of them are trying to do that. With regard to the U.S., I mean, the issues around the world are exactly the same everywhere. Number one is rising income inequality. Number two is that too many people have been left out by globalization worldwide. Right. Number three is immigration is considered to be out of control, you know, in many of these countries, and they've lost their sovereignty rights. Yeah. So if you talk about the U.S. election, number one, you know, right now people, you know, all the intellectual elites are saying that Hillary Clinton will win easily. I would just warn them that they have been wrong 3 times in a row. And
good point, Britt.
I don't know why they would think that they'd be right this 4th time.
From your standpoint, though, Britt, you've got a portfolio to manage and money to allocate. Does this decision dictate how you allocate money right now? In terms of this market today and over the long term, how do you see allocating your billions in this market?
Yeah, well, let me just say, first of all, that this market's proving once again that a properly diversified portfolio is absolutely essential. So, for instance, the Texas Teachers portfolio has only 40% allocated to global equities, and our portfolio for the month of May is flat, and for the year is up 2.5%. You know, we have 3 other strategies that, even though the markets are down, we have three other strategies, 2 of which are up 9% year to date. And one of which is up 2 or 3%. So
what I'm trying to get at are, what are those strategies, Britt? How are you going to allocate money? What is that strategy?
Yeah, so the strategy so far that's up almost 9% year to date is a deflationary strategy that's primarily concentrated in sovereign bonds, principally long-term government bonds. We also have a second strategy that's oriented around absolute return hedge funds, which are specifically designed not to lose money when the markets are going down.
I see.
And we have a new strategy called risk parity, which is also up about 8% so far this year.
And in terms of equities, are you expecting the rest of the year to continue this selling that we've seen, or do you think we're going to see a bounce back in terms of stocks?
Well, let me just talk about the UK, because that's a little bit more obvious.
Sure.
What you saw on Friday was the UK only lost about half of what it had made when people thought it was not going to exit the European Union. So it would be very unlikely for the UK not to go down at least another 2 or 3%, just based on getting back to where it was beforehand. The other thing with regard to the UK is their price-earnings multiple is almost 20 times. It's even higher than the US. The rest of Europe is around 15 times. So to have the UK should re-rate down. So even if they get earnings growth, the UK should probably expect the market to go down, let's say 10%
Sure.
over the next, 6 months.
I see. Britt, great to have you on the program this morning. Thank you so much.
You are very welcome, Maria.
We appreciate
You have a good day.
it very much. Britt Harris joining us there.